What's going on, everybody? Brent is here with another video. Thank you so much for being patient. Gosh dang you guys, it was something insane yesterday. I mean, we saw this drop coming from the UJ, and not this UJ. We saw JB going this way. We saw UCAD had a little bit of drop, but I mean, wow, you guys, this was such a big drop in general. Price dropped around 430 pips, right? Not even more actually than that, around 500 pips. Price dropped, creating that stop hunt. It's really stopping all those sellers. So a lot of people ask, and I'm gonna, before I just want to make sure that I have. So before I get into it, you guys, I want to let you guys know why price does this, okay? So price decides to have this market consolidation for one reason and one reason only, or market manipulation, okay? Market manipulation happens, and I'm going to go over the reasons right here, okay? So there's areas in support and resistance areas, and I'll show you in previous price that this is not the only time price has actually done this. Price has done this a lot other times as well. And I'll show you like right here, price decided to do it where they had this huge wick. Again, price moved around 700 pips in about 3 days. Okay, so we see price did that once again here, and then we'll see another side of price where it does it once again right here, where price then makes a huge wick to the downside. Oops, wrong one. Let me get the price indicator. Made a nice, just like yesterday's price, right? Kind of just did that huge retracement. So as you guys see, price does this every so often. Obviously, you guys know that this was during Donald Trump's election right here, and then as we can see now, price did the same thing right now. Okay, so are we going to go continue with this trend, or are we going to see retracement? So this is the big thing, you guys. This is a huge market structure has been broken, right? Test this lows, as we talked about in yesterday's video how market price is going to test these lows, and in one day, you know, it tests this low. So we already have that confirmation that price has now tested previous lows. Will price then retest highs and then drop low, or will it go higher? So before we get into that, before we get into market predictions, before we get into how price is moving and how all these things are formulating, I want to go over why and how this happens. So thank you guys so much for being a part of this, and it's so good to see you guys. Hey Justin and hey Michael, good to see you guys. So right now we're going to go over how the market does this, right? This is pretty much the art of banking institutions. This is the program we're working on for a couple of months now for you guys. So the participants in the Forex market are the bank investments, commercial corporations, hedge funds, governments, retail currency converters, brokers, and large network individuals. Sorry, you guys. And retail currency converters are basically the ECN and market makers. So when you open up a broker, you are trading with the ECN or a market maker. Say that. So my broker is Forex.com. Okay. So when I'm trading, I am in an emulated market that is formulated by Forex.com, okay? And for you guys, if you're on Traders Way, Oanda, and so forth, right? FX Spot or FX, I think there's a couple other United States brokers. There's not a lot of United States Forex brokers. There's like basically 3 ones that people standardize, but they're obviously in Europe. There's a lot of different FX brokers as well. But long story short, you guys, they're based off 3 different markets, or 3 different types, right? You have ECNs and market makers, right? So this emulated we play on, you guys, that we trade and make money on, is basically 2 defining simulated programs, right? So these simulated programs that we are basically putting our money in, which is this market, right? This is considerably called the spot market Forex, right? The spot market Forex is where all of banking and institutions get into the interbank market, right? The interbank market is where all the currency exchanges from all the 8 major currencies to the exotic currencies to minor currencies all come together and they make a form exchange rate, okay? So that is where one way of us knowing how the market works, okay? So going back to the basics, this is how the Forex market essentially works, right? You have the major banks, right? Citibank, JP Morgan Chase, Merrill Lynch, Bank of America, Deutsche Bank, HSBC, Berkeley, and other banks too. You have XTB, which is a London bank. You have as well as let me try to think of a couple other ones that you guys know of. We already talked about Chase. And there's other banks. There's other banks as well that have a lot of huge influence in the forex market. Okay, so going into this, we understand that 92% of the volume is traded through the banks and institutions. How they trade their market is through this network, you guys. It's called the electronic broking services. So this electronic broking service is what they are able to put hundreds of millions of dollars at one time to be able to trade in the market, right? So all they have to do is get a couple of banks together, call each other up. You know, obviously this is called insider trading or market manipulation, but you know they don't really get caught for this stuff, you guys. This stuff has been going on forever. You know, HSBC was I think the last bank. Or Wells Fargo was the last bank that got caught for manipulating currency exchange rates. They put like over like 50 million or something at one time. But like at the end of the day, like they're essentially the makers of the market. So it's kind of hard for the SEC to define if the market's going to be manipulated or if they just did a very short trade, right, or short squeeze. So for instance, like electronic brokerage services are what the banking institutions use. We don't use the EBS. The EBS and the Redditor's 3000 spot market, we don't have enough money, right? We would need for the average EBS transaction is between 50 to 100 million dollars. This is like way above our pay grade, way above our league, right? And then you have what's called the minimum size banks, small banks, right? These are the commercial banks. So what happens is when we as brokers, if our order, right, say if I do a standard lot for, say I do 5 standard lots for the USD Japanese yen, which is something that I would do, right? It's 5 standard lots, so that's 500,000 lots, right? So if I do 500,000 lots at UJ, and usually you can get that order filled in-house, right? That's not a lot of money for brokers, right? So that's an in-house broker. So the ECN, right, the retail NCNs will fill your order. They will fill your order. You'll be automatically entered into that trade. But say that you have a trade that's like 3,000 lots, right? So obviously you're thinking about you're having millions of dollars, right? If they can't fill you in, they will go to a medium-sized bank or a small bank to fill your order, right? They will outsource to fill your order, and then they will get commission off the spread, right? The spread is usually 2 to 3 pips per broker, sometimes a little less and sometimes a little more. Sometimes it's fixed as well. So this is what works, you guys. So this is how we get these huge market manipulations. Like here where we saw that 1,000 pip range, is that what they do is that when they know that there's a lot of pending orders, because we don't see the pending orders, okay? We're talking about these investment traders and investment bankers. They have the ability where the clusters or sell orders below those levels. Exactly, Michael. So you got it exactly. Manipulation dominates all markets. Retail traders are at the mercy of the market makers. Exactly, Justin. You guys got it. You guys are completely aware and coherent. Exactly what I'm saying. So exactly. So long story short, since you guys completely get it, is that yeah, all these orders were being filled from the upside and the downside from the market makers and the institutional buyers. They completely have all the control of the market, right? So they will see the proprietary traders. They will basically have a day or a couple days of the year or in. See, we didn't have this happen since 2016, right? In 2016, we also had HSBC get filed for market manipulation for the Great Britain pound, right? So you guys see how there's a fluctuation and how there's so much correlation between these market manipulations and market. I want to say fraud. It's fraud necessarily because it's essentially legal fraud because they're able to get away with it over and over and over again, right? The market goes literally 700 pips, you guys, in less than 2 days. Like, come on now, like that's not normal. That is not normal at all. These huge wicks are just opening the spread, right? Opening orders, from the upside, opening these pending orders because they know that there's a cluster of them here, and then they short them out just like whipsaw, right? We talk about a heartbeat, how your heart goes up, goes down, and then it comes back into a just a singular motion. We have that vibrational frequency, right? It's kind of essentially how the market plays the virtual reality of our life, right? Of our belief systems. So the market essentially does the same thing, where it tests the highs, tests the lows, stops out the lows, stops out the highs, retests those same highs, and then works off the lows that it spiked down to, because it knows that people are going to sell once again. So that's where we're going to see. That's what we're going to go into later on. We're going to talk about where price is going to move. But I want you guys to understand how this is going to work from here, from previous market structures, because previous market structure always leads to new fine clues. So we see the break off the low, break off the high, break off the low, and then market consolidates for another. I mean, come on, it gives you about another 300 and something days, right? Price then consolidates. Excuse me, not around 90 days. I'm thinking a little too ahead of myself. So market consolidates for another 90 days to trap all of the sell positions, right? Because people, since they saw this huge spike to the downside, I'm going to erase this real fast so you guys can see a better picture of it. So they trapped these sellers, right, for about 300, or I keep on saying 300 days. I was watching something last night. I keep on recording in my subconscious mind 300 days. So like 112 days. I don't know what's going on with me today, guys. Didn't have my smart pills. Okay, so this is what happens. So market tests the lows, the highs, right, and then tests the lows, trap the sellers, and then they work off those lows and highs for about 113 days until Donald Trump was elected, and obviously we saw that huge breakout to the high, where banks and institutions then drove price super high to close out all the sellers that were previously in this market, right? So that were previously in this market where they were at this low, they're shorting. They consolidate, they open the spread, they manipulate price by giving this huge 700 pip drop, trap those sellers and buyers, then trap the sellers once again, close price for 130 days, and then shoots back price in a quarter of the time it took for price to drop down. They do the same thing and take it back in about 50 days. They take price all the way back from previous of January 2016. They take price by in December 2016. So you guys see how the cyclical cycle of that factor is where price literally was dropping from January, and then by the end of that year, they're already at that high once again. All they had to do was market short all the traders for about a full 7-8 months, then stop them out by consolidating, shooting all those pending orders that were non-existent anymore. And then once they had all the price they needed, they shot price back up in 45 days, stopping out all those traders. Just literally 45 days. All of what it took about, I would say, 200 days, maybe a little longer, of price to formulate from this high all the way down to here. So 237 days it took price, right? Around 178 days. It took price to drop all the way down to these lows, and then in 45 days it takes it back. So, and then obviously we have the consolidation to trap those sellers for about 113 days to get price in that direction. So going back into what we were talking about earlier with the Forex market, this is how it works. So the Forex market, where they'll have traders, and excuse me guys, I have to get my, be right back. Just give me 1 second, you guys. All right, all set to go. So how this works is that price will first come into an area, right? Come into an area like here, right? This is consolidation, but a nice liquidity build-up area, which you like to call the accumulation stage, as we talked about yesterday, where we have accumulation. We have, oh, and that reminds me, I'll set that up. I already did the map for you guys of the 4 phases. I just forgot to put in the Discord last night, so I'll send that after this live stream. So I'll do that right after. So apologize for I'm not getting that out tomorrow. So anyway, so the accumulation phase, as you guys can see, is right here, right? Then you have the markup phase, just the same thing where price wants to induce you to go long. So the major banks are obviously running the show right here. They're using this network just like how we're retail traders and we use this network, which is the retail ECNs and retail market makers. This is our way to make money. This is their way to make money. These hedge funds, this is their way to make money too, right? They use this minimum size and small banks as well. They're using this area. They're using these small banks and medium banks to fill their orders, because a lot of these hedge funds and commercial companies, they either use this to clear their books, like huge companies like Coca-Cola or Verizon or Sprint or so forth. They have a lot of money. So what do? They put it in the Forex market to grow long term, right? And they do that by having a certain investment wheel that the hedge funds that manage their money will invest into, right? And a lot of them do a different type of thing where they do currency swap trading, which is essentially like an ETF, but more so of a Forex kind of currency type of ETF. It's a little different than what we do as spot traders, as speculation investors. And an ETF that essentially is based off Forex or currencies is a little different. It has a lot more to do with more capital and less leverage, because these companies don't need leverage like us, guys, because they have billions of dollars that they can just put into the market, right? They don't need to have the leverage. So essentially they can use these different type of investment wheels that factor these markets, but this is how the market is driven, right? It's driven by having these small banks and big banks or medium-sized banks being filled their orders of these hedge funds. So what is happening is that we're being traded against, right? These guys are running the market. These guys are on top of us. We're the last. We're literally the last of the totem pole. We're the smallest people that are going to do this. So if anybody's going to know last, it's going to be us, which is the retail trader. So that's why we have to define a scale, define a market, and define a strategy that will help us make money over time by knowing how these investment makers and investment wheels trade, right? So the so we talked about how the rhetoric strike, right? This is where all the super banks and do all their transactions against each other, making the interbank market and exchange rates. We talked about that. We talked about the rhetoric strike, right? So we talked about these are the 7 traded markets on the ECB market, right? So this is the electronic connecting broker network. So this is where most of the big banks focus their trades on these currency pairs, right? So if we were to go to the Euro NZD, we'll type in the Euro NZD. I don't trade the Euro NZD that much, but we'll look at it. Did it have a market spike? Let's check it out. It didn't have necessarily a huge market spike. It had a little crossover, but that's okay. Euro NZD, we're going to be mostly focused on US pairs, because that spike was mostly specified yesterday on US pairs, because as you can see that Australian AUD got a huge spike out. Obviously, this is going long, right? This is just a trap. We definitely know that price is going long for the euro, for the Aussie dollar. So that's definitely going up. We saw that UJ, right, was going up. We can see that could probably be consistent, but then obviously it's going to test those lows. So it want to make that foundation point. I don't know why it decided to break this area so quickly. Maybe that there's a lot of resistance in this area and they wanted to trap those sellers and then stop them out and then run them off and then retest those lows. So that's where I'm looking for my prediction on that. And then we have gold. Gold didn't really do that high of a spike. Obviously, it was just trying to test this 1300 level, which we mapped out earlier of our previous videos. And then we have Great Britain pound US dollar, where price then made that spike to the downside one more time to test those previous lows, right? Didn't necessarily test those lows. It tested the lows of around April of 2017. That's where the lows test right now, and then we'll see if market's going to test these previous lows, but it looks like market will then retest to the higher as well. So price is definitely going into a different wave. So screw with the retail minds, institutions screw with the PHS. Yeah, exactly, right? The psyche as well. They totally screw with your psychological aspect of your mind, right? Because they totally are not trying to over time have a bunch of retail traders that are gurus that are making millions of dollars a year, right? They would be out of business. If everybody was to make money in the Forex market, there wouldn't be a spot market anymore. There wouldn't be a spot market, forex market. Everything would be based on just trading with interbank markets, with big banks trading big banks, right? There wouldn't be any retail traders, but they know that there's a lot of liquidity and a lot of profit, just like the casinos, you guys. The market, essentially, the forex market for speculation investors like you and I is like the casino. They will give you money in the short term, but in the long term and the percentage value, they know that they'll make money over time, right? They've done the percentage over time. They've already calculated all this ahead of time before they even got into these markets. Before they even established this, they've already had 1,000 test dummies, 100,000 test people that did the technical analysis that we're taught, right? Head and shoulders, trend is your friend, 3 hits to the trend is considered a trend, Fibonacci retracements, harmonics, is all that, right? They taught you all that. That's why they give it to you. That's why they give it to you for free, right? They give you all these free trainings, right? You go to forex.com right now, right? And they'll be like, oh yeah, have a training tool for us. That's what they want you to do. They want you to learn these easy tools because they know at the end of the day, it's a very short, sustainable gain. They know at the end of the day, they will take back all the money, right? That's why I made a investment, not really investment strategy, just a forex strategy that specifies mostly on how the investment bankers work, right? So we talked about the 11 setups that I do, right? Midweek reversals, zone hopping, the M&W formations, 3 levels of rise, how the market makers create trends and why, right? Forex trading sessions, when to trade the market false wedge breakouts, peak formation lows and highs, market anchor legs, whipsaw daily formations, and market stop hunts, right? Because these are how the bankers trade, right? I've done so much back testing, you guys, for thousands of trades. I've literally back tested, right, between doing it on an emulated market and then doing it with live money, right? I've done it and I've tested the markets and I've seen how the markets work, and I specify that these are the most 11 essential, most credible trading setups that I can trade and give to you guys that are obviously fit with my integrity, because I know that these work, because obviously I made money on how these markets work. So when I'm seeing these setups, like we look at midweek reversals and so forth, I can be able to map it out, and we can see it once again. Look, there's an M formation, right? We talked about M formations in the program. The program talks about M formations on the 3rd level, right? M and W formations. We could talk about markets zone hops, right? Zone hops, how the market consolidates. It zone hops, and then it zone hops once again. We have that in the program as well, where the market shows you zone hops. Whoops, let me just get to it. Sorry. But there we go. So we talk about zone hopping, right? Zone hopping is a big piece of how the market, we huge breakouts in the market days, right? Where they consolidate price, they zone hop, and then they consolidate price one more time. We talk about how that works, right? On how the market has these zone hops, right? We'll talk about consolidation breakouts, right? How the market consolidates, makes the lower lows and lower highs. And if we were to go into detail, before I remove this stuff, we can see the W formations that are formed at the bottom of the market, as well as they form at the top of the market, right? We talk about how the W formations are formed in the market, right? Excuse me. Sorry about that. Excuse me. So the W formations are formed where price is then calculated at the bottom, and we talk about that in the program. Where price is then, the W formations, right, are formulated at the bottom of market price. So all these things that I've been able to use to better my trading life and just my life in general, to not have all those headaches, is based off just back testing the markets and having all this considerable market testing and stuff like that has been able to give me desire. So Great Britain pound, JPY, yeah. So the Great Britain pound and the US dollar are totally integrated. Not like what I mean by like, if the dollar's short, but like we come from Great Britain, you guys. Like the United States is from Great Britain, so like we're basically like the United States is the cash cow for Great Britain. Like we have the second biggest banks in Great Britain. So like we work hand in hand with Great Britain. As much as people don't think that we're not correlated together, we're completely integrated. Like we come from that country, right? Our founding fathers are literally from Great Britain, and we literally are just a monopoly, trying to really have power, resources, economic structure, and so forth, and price will always give you those decisions on where we're able to go. So that's for another story, and that's a lot more to do with history, right? I've done a lot of research in history and how the dollar is created, how fiat currencies were first came into establish, and that gave me more consideration because the more knowledge you have, the more doors are open for you, right? So, for instance, like trading in the markets, like when I'm doing when I'm reading a lot of books, right, or when I'm reading a lot of research reports or quantum physics or science in general, it all is all assembled into a factor where the market can take into consideration, right? Because a lot of these things that we learn are completely relevant into how the market plays and how the market acts. So yeah, Great Britain pound, Japanese yen did do a spike too. So it is more advisable to get in and out of trade ASAP. Yeah, scalping is a good way to trade, Justin. Scalping is a great way. So I scalp usually 60 to 80 pips. I'm not a person to hold trades for very long. Like if I'm gonna hold a trade, it's gonna be possibly for a day and a couple hours, like maximum. My trading strategy, you guys, I'll put my trading strategy on the Discord, so you guys will see exactly. I mean, you guys already know that this is my trading strategy. Like this is my baby. This is how I trade. But I'll tell you exactly like the percentages that I look for, what type of setups I look for. I mean, these are the setups I look for. But like I'll tell you, like I look for 60 to 80 pips on an intraday trade, right? I'm looking for 60 to 80 pips on this intraday trade, nothing more, nothing less. For a day hold trade, because I don't really hold my trades for more than a day, I'm looking for 120 to 140 pips. Reason being, the market likes to go in between 250 pip intervals, right? So these 250 pip intervals that the market likes to play into, I like to catch it on the run. I don't like to wait for the retest, right? I'll catch my 120, 140 pips, and I'll be out of the market, and that's perfectly fine. So I'll put that also in the Discord as well with the 4 phases, so you guys will have that and see my trading strategy and you know the lot sizes I use and so forth. So that being said, and as well, guys, you need a trading strategy. Like a trading strategy is huge, right? This is just a setup, right? Like a note card or something like, right? Like I have this book where I look at my trading strategy, where I have a book that I follow these steps, right? These are literally essentially all the steps that I do with trading in the market, right? And it's basically called it's my investment wheel. So I have this book that I look at every single day. When I look at the markets, I can go to this book and I can literally just go in and be like, okay, I see where the market price is at. Okay, let me see where price is going to be. And then I can literally look at this, be like, oh, price is either going to do one of these 4 things, and then I have that available for myself because I'm always learning every single day, you guys. I'm one that's always learning, right? Even though that I've made a lot of money in this Forex market, I still am learning every single day. I'm very, 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 very against people who think they know it all, and then once they know it all, they lose it all, right? Because you've seen it over and over again. People that think they know it all, then they lose it all. So, you know, I do recommend having a journal, having something. I mean, I have plenty of them. I'm working on another one right now where I'm literally just always designating and always going back into. Like I've made programs for companies, I made programs that made people thousands and thousands of dollars, right? But that doesn't make me feel like I know what I'm talking about. Like I will then go back and retest, right? I'll then go back and redefine my notes. I'll go back and redefine my strategies, because then I just want to be the best, right? Everybody wants to be the best. Just like Kobe Bryant, right? You have that Mamba mentality. You just want to focus. You want to be so dedicated to your craft that at the end of the day, people will know you for it. So like that's where you know, a lot of this stuff comes into understanding. So so if you don't have a strategy, yeah, your plan is to fail. Exactly, Justin. You always look left. The prices the clues. Exactly. Even though market looks chaotic, its structure is correlated with retest levels and structure, psychological levels, and magnet. Dude, Michael, you're killing it. Yeah, you're completely aware, man. It's that your synchronicity is so defined right now. Completely have used a lot of the gems that I've you know, that were already here, that you guys have already known this stuff. Like the thing is that you guys have already known this stuff. You just needed someone to really just tell you the roadmap, because all this essentially was already programmed in your mind, right? But you just needed someone to be like, oh, like this is what it was. So all of you guys already knew this stuff and know all the stuff you want. This is essentially like becoming you know, in vibrational frequency of what you want and desire, then it will start to unlock those neuroreceptors that are, obviously not being correlated right into your cerebral capacity, and the ones that is defined right, then your cerebral cortex into your neural pathways will then align with what you desire, and then that's when you will paradigm shift, right? Just like the market does these paradigm shifts, right? The market comes into one area, and then after it sends and it has all this consolidation, it drops into another level, right? And then the market consolidates and then it drops into another level, right? So I won't go into more into quantum physics or neuroscience. We'll go in that to another video, but we're going to talk about where price is going to be right now. So as we can see, that price for the Great Britain pound US dollar, as you said, Michael, definitely touched those psychological levels, right? That 123,750 right there on the dot. On the dot, you guys. I mean, this is insane. Literally touched it on the dot, right? So touched it on the dot. Price just at 12750, and that area was then formulated, right? And then we have that test of the high. I wonder where this is at. Another psychological level, right? 123,128,000, right? So we see that the stops of the high here, and then they closed and they stopped here. So what are they going to do? Consolidate price, right? Maybe test the lows one more time, and then they're going to drive price back up. And that's literally what they're going to do for 2019. All this was a structure to break the lows, break the highs, consolidate price, scare the traders out of their money. Once they scare the traders out of the money, they'll drop price down one more time to induce them short one more time after they consolidate and trap, just like they did here, right? They drop price down, just like how they had that huge spike again. They'll drop price down, they'll consolidate, and then they'll drive price back up. They'll drop price down, they'll consolidate, and then they'll drive price up, right? And same thing with the euro dollar, right? The euro USD. Euro USD didn't really get affected as of it's only some pairs that got affected, so that's actually another thing that was kind of odd. So even though they're cross paired with the US dollar, so that was odd. So as we can see here, the consolidation right here, the build up, right? The retest of the lows, people are trading low, and then what they're going to do is they're going to shoot up to the high, testing that previous high for that M formation, right? They consolidate price and then come back down, testing the lows and stopping out all of the sellers that were sold right here. They're going to make a cluster to go long, right? So Great Britain pound is going to be formulated with the same thing. They're going to cluster the lows and they're going to go long, just like with gold. Gold literally just is going to test that 13. So price literally came down to just come right back up. So what is gold going to do? Consolidate price. Consolidate price, test higher levels, right? We're going to see the test probably of this previous structure high. 13550, right? Consolidate price, and then we're going to see a drop to the downside, and then that's when we'll see a drop, and we'll see the US dollar start to fulfill and come back up and then retest, right? It's just the formulations are so intersync with each other that the market's going to go down, come up, go down, retest, and go up. Yeah, exactly, man. I definitely have a coach myself. I've learned this from a lot of people. I've definitely been taught by some great traders, some proprietary traders, that are making a lot of money, and also from psychological, not just spiritual and enlightenment coaches as well. A lot of this stuff, money is great and all, but I've learned a lot more so with my trials and errors than I did with my success, because money's great. Having withdrawals of $12,000 per week sometimes is so amazing and stuff like that. But as well, it's not, that doesn't define who you are. It's when you are built with pressure, when you have pressure built upon you, and you're able to come back from that. I feel like that is essentially what life is about. It's about making yourself break yourself down to grow yourself, right? To make yourself a better person, right? Easy life is gonna leave with obviously mediocre results. You gotta do what 99% of people aren't willing to do, right? Take risks. Do have nights where you gotta believe in something that you can't see, right? That's what a lot of people can't do. That's why a lot of people aren't rich, because they want to believe in something that they can't physically see. They're always like, well, I'll believe it when I see it. Well, then you'll never get it, because you have to believe in something. The uncertainty is, the life is built off uncertainty. And I'm not going to get off the path too much, but I want to leave you guys with this. We were made in our mom's womb for 9 months, right? Point blank period, right? What stopped us? And we had no control over us being created, right? We all just came in, maybe we came in with different, yeah, exactly, the process. Some of us came in with obviously defects, but most of us came out normal, right? We all came out, fully healthy, amazing creations of God, right? Or whatever you believe, God, anything you believe in, right? It doesn't matter. It's all relevant. So think about this for a second, you guys. If we had no control over us being formed, like obviously our mother, right, was giving us nutrients and stuff like that, but that's just, she just had to believe that you're going to be born, right? She didn't think about, oh, I want this kid to come out with like all the limbs. She didn't like have to keep on thinking and straining and stressing her head about it. You just naturally came out normal. So just because you're born in this world, what made you think that any of that changes, right? What made you think that any of that changes? That any of those the cell reproduction and the electromagnetic fields and the universe stop working for you because you got a job, or because you got divorced, or because you lost all your money? You have to have belief. There's nothing changed. Your perception just changed. That's it. Only thing that changed in your path from you believing and having everything you want and not having anything you want is just your perception. It's all based on perception. Everything we see is just based off your perception. So that's where a lot of the market is just based off what you perceive. This market is essentially just a perception wheel of the matrix, right? We're essentially trading and trying to make high probabilities based off perception. And perception is driven by market behavior, or sorry, not market, human behavior, right? Emotions, energy and motion. Energetic vibrations that correlate with the universal field is what we establish and make into this, what we call Earth, right? Electromagnetic frequencies that are bundled together, because everything's just vibration at the end of the day. But we perceive it differently. So once we perceive it differently, then the whole entire imagination or the whole entire frame of what we're looking at changes, right? That's why we have this test of the glass half empty or the glass half full. What is your perception? What are you believing? Are you believing you have a half full of glass and you're grateful? Or, oh, I only have a half full of glass. I'm miserable. I'm unworthy. I'm doubt, right? It's all about your perception. Everything in life is perception. And we already know about the law of attraction. You get what you think about, right? What you think about will manifest. It's been proven by science. So, like, that's the same thing with the markets, right? You could be the best trader, the best technical analyst, but if you don't have the right perception and if you're not driven by the right things, right, you're going to lose. It's just a matter of time, right? So like when we're talking about price, right, I can map all this stuff out and I could say that, the price could go, obviously, consolidate to the lows, retest those lows, make that W formation, just have that wick off that low, break down, consolidation, and then test higher, right? Retest these previous highs and then drop back price, driving price down to these levels low. I could completely see that. That is a really credible analysis right there, right? Why? Because price wants to obviously retest these lows, consolidate price, stop out the sellers that were obviously low, make that second leg to the high, make those trap positions for traders to go long once again, and then after they have enough, by March, right, they'll come back and reverse price down to the downside to test these previous lows of 102, 103. That's a really credible answer. But someone could have a totally different perception on the same thing I'm looking at. And they could be right or could be wrong. That's why everything is based off literally only perception. So fear and greed dictate markets. I see now why you have to remove all emotions from trading. Exactly, right? Trading Zone, right? Trading in the Zone. Very, very awesome book. I recommend you guys pick that up immediately. A book that obviously I've read over and over and over and over again. Trading in the Zone. Forgetting the author's name, blanking on the name right now. It'll come to me. Just give me a second, you guys. Trading in the Zone. You guys will see it. Just look it on Amazon if you guys have Amazon Prime. If you guys have whatever you guys use for your books. Yeah, just type in Trading in the Zone. Talks all about the emotions behind trading. You cannot have emotions behind trading, right? Because the emotions you are bringing into, right? Just reiterating what I said earlier, is going to make your foundation, which is going to make your emotional structure, which is going to change your perception, right? When you have anger, fear, doubt, worry, you have a different perception than when you have love, prosperity, happiness, joy, and faith, right? It's all about the persistence. So what is the longest you have held a trade? I know someone who holds trades for months. Yeah, I mean, people trade on the monthly chart all the time. Monthly chart, people trade on the monthly chart all the time. I don't hold trades for that long. I hold trades for 1 to 2 days longest. I'm not a big trade. I don't really hold my trades for that long. The longest I've held a trade was, I think, 12 days, and I didn't make that much money. I was just testing the market. I did like 2 mini lots. And the longer I held trades doesn't mean the more I made money. That's not essentially how that works. Some people want to believe that if you hold your trade for longer, you'll make more money. It's like, yeah, but if you're on the right side of that market, right? So, yeah, the longest I've ever held a trade was around like 12 days. The short, I mean, obviously the shortest, I've gone in and out of markets in 20, 30 minutes, but like, yeah, I don't really hold trades for that long. I'm not a big swing trader. One of my best friends is a swing trader. He holds positions for months at a time. And obviously he doesn't even look at the charts, maybe like once a month or twice a month. I don't know how he does it, but he's obviously making a lot of money, so he's killing it as well. We just have different mindsets, right? Like I come from binary options, right? He comes from stocks. So when he comes from stocks and trades the forex market, he looks at just a trend, right? He's not looking at the ups and downs. He's just looking at it from a range, right? For me, I come from binary options, so I'm looking at every single move, right? I'm looking for the lows, the highs, the breakdowns, the break up. Like, I'm looking for everything. So like, just like I said, we have 2 different perceptions, so obviously we trade differently. So like, I am I'm a counter trend trader, but I will, I only trade for about 3 times a week. I trade 3 times a week. I look for 60 to 80 pips on my intraday trades. If I hold my trade for a little longer, maybe a day and a half, look for 120, 140 pips. But usually I'm closing out with like 180, 190 pips for the week. And I do standard lots. If you guys don't know, I'm doing standard lots. My account size is a little higher, but yeah. So I definitely have been just using these levels and these different trading styles, right? Obviously the ones that I'm teaching throughout the videos for you guys to understand. So I don't want to go off the path too much. I want to go more so basic into that, and then if you guys have any questions on the Discord, please feel free to answer. So just for the hypothesis for the USD Japanese yen, we haven't seen a breakdown like this in a while. So when I'm talking about my hypothesis, I do want to see a retracement to the low, but we're going to see a consolidation for about January, maybe February, where price is going to then have that nice consolidation probably at this similar level, making probably maybe a spinning top or an engulfing candle, or price, not engulfing, excuse me, like a railroad track. So candle will then form probably February candle will probably be up here, right, with a nice wick to the up, right, to retest these previous levels. And then we might see, right, March candle test these lows, and then obviously have a nice wick candle here. And then from there, we'll probably see that breakdown to the downside to test these lows, maybe a spinning top here because it's the consolidation of this low. And then obviously once you see that, probably see a move to the high to retest these levels one more time, right, to trap these sellers of previous market, and then maybe see a downward spike to the downside after that. So we'll see where price is going to move from here. We'll see if price is going to break this area, but I'm not going to try to confuse you guys with too much. Just make sure you guys are looking at the strategies, looking at the Discord group when I do the signals. We can see that obviously this is making asymmetrical breakout triangle as well. So if price decides to break out, which it did kind of right here, obviously it made that test right here. We see price break out of this area, then probably we see price break this low. Might even see it test a little lower, and then maybe one more test to psychological level, and then maybe a breakdown to the low, breaking these previous levels, testing about 2,000 and 12, where we had that stimulation of the $1 trillion deficit to the economy, maybe that reversal. So we're going to go with what we have, day by day, but market price is looking like a bearish market, looking very to the downside for the UJ, and we will just go forth and be able to make our factor with that. So if you guys have any questions, please feel free to put in the Discord group in our Forex chat. Thank you so much for coming on today's live stream. Hopefully I didn't talk your ear off with too much psychological stuff, but it is really important, especially if you want to take this to the next level in your business. Obviously, I learned a lot of this stuff on my journey, so I wanted to share this with you guys because I feel like, if I can just teach one or two people, how to essentially have that new paradigm shift, and I feel like I've done my part. So appreciate you guys. Thank you so much, and I will see you guys in tomorrow's video. We're going to go over these setups in the market, these different structures. I'm going to have them mapped out so you guys will have it. And then hopefully we'll be able to get onto a live call soon enough. Once we get a lot more people that are interested in Forex and Traders Profit Club, because this is a lot of crypto as well. And obviously we can go over crypto and tomorrow as well. And yeah, so appreciate you guys so much. Thank you guys for being on today. And I will see you guys tomorrow. Have a blessed day.